Okay, so we will start. My name is Noor Yamak. I'm a senior program manager at ESA Business School in the Exec department. It's a pleasure to welcome you all to this exciting webinar. We are honored today to have with us Leonardo Etro, Associate Dean for Special International Projects in India, as well as Associate Professor of Practice in Corporate Finance and M&A at SDA Bocconi. In addition to that, he's the Scientific Director of our Executive Master in Financial Management. I would also like to thank Life Organization for their support of our students through generous grants and financial aid programs. Before we begin, I would like to inform you that at the end of the session, we will briefly introduce our Executive Master in Financial Management program that is delivered in partnership with SDA Bocconi School of Management, and which will start in October 2025. Please, Leonardo, if you can start.
Yes, Nora. So first of all, thank you very much to give me the possibility to be exposed to you, to this financial community, let me say, because I'm sure that you are all beloved of financial topics. And so it will be very interesting to talk about something that is really actual, let me say, and is about valuation in in the current world, in a world where uncertainty is basically dominating any kind of decision. Is a world where it is very difficult to govern and to control companies in the process of value creation. Also, yesterday or 2 days ago, we have seen what happened to the rating of United States of America. Basically, the rating was they had the downgrading, and the result was immediately a higher volatility on the stock exchange market, on the public debt. Many investors started to sell public debt of United States of America, and which will be the consequence on other market, like European market or Middle East market. Obviously, I can say that valuing a company, it has always been more an art than a science, let me say. And I think that we can be all aligned with this definition. There are two things in finance that could be considered more an art than a science. The first one is valuation, and the second one, creating a business plan. Because there are many aspects that we have to take into consideration when we approach the valuation of a company, when we approach the business plan creation for a company. And if we don't govern these factors in a perfect way, especially in this period that are really volatile, the risk is that we have a big difference between the value we performed with the standard corporate valuation approaches and the price that we are available to pay when we want to buy an asset. I try to share let me say, not there. Better if I use this one. Okay, can you see it?
Yes.
Thank you, Marie. So, value differ from price. and especially in this current period, this equation will be difficult to be, let me say, controlled and governed, because there are many factors that could influence the value of a company. There are many factors that we have to control and to quantify in the right way in order to reach an objective valuation that is coherent with the price that we are available to pay for an asset. I mainly say that there are four factors that we have to take into consideration. The first one is about business model. So this computer, what happened? I changed the computer yesterday because I broke it, and so I have a few problems in using the new one, but I will manage it. Business models. What do I mean with business models? I mean that depending on the industry where I am, there will be a more appropriate corporate valuation methodology to be adopted in order to capture the value of a company. And even better, I can say, depending on the business model I have, the capital structure I have, there will be a more appropriate financial variable to be considered in order to quantify the value of a company. And so I can make you the first example about these two companies that you probably know in an industry that is suffering a lot now, where it's very difficult to make valuation. And the industry is the luxury industry, okay? Because you know what is happening now in the market. If you talk about luxury, all the investors, they fly away because they're afraid about what is happening in the Lavagna. Okay. And the example is about these two companies. We have where is?
Excuse me, but we can't see anything on the whiteboard.
Yeah, me too. It's the same. Okay. The first example. Would you see?
No, we can't really see
No.
anything.
Not from my side as well.
Ciao, Leonardo.
Hadi, hi.
How are you?
Very good. In this moment, not really good because I don't manage to write on the. Okay, business models. I have to use maybe another color, but okay. The two companies are the following one. Moncler. Let me change the one because it is opening whiteboard. is a nice thing being live. It can happen when you're live that it doesn't work the software, but no rush, we will manage it. Give me 1 second. Okay, the two companies are Moncler, first of all, and Ferragamo.
Okay, almost working.
Everybody knows these two companies. I think they are in the luxury industry. If you look at the last financial result, what could we discover? First of all, that revenues for Moncler in 2024, so the last accounting year, were about 3.1 billion. For Ferragamo, revenues were about 1 billion. What about the EBITDA? That is a relevant measure that we have in valuation. EBITDA. In case of Moncler, the EBITDA was 1 billion, more or less. For Ferragamo, it was 0.2 billion. Okay. What does it mean in terms of EBITDA margin? And as you know, EBITDA margin is about EBITDA over revenues. It means for Moncler, 1 out of 3.1, if you agree, is more or less 32% EBITDA margin. For Ferragamo, 0.2 out of 1 is more or less about 20%. Okay. Okay, these are data about the two companies. Now, what are you expecting in terms of market capitalization now on the stock exchange for the two companies? So we can use market cap now. Of course, I'm expecting a greater market capitalization for Moncler because more revenues, more EBITDA, but I maybe don't expect the following data. If you look now at the Italian stock exchange, Moncler value is about 16 billion. If you look at Ferragamo now, the valuation is about 1 billion. So there is a huge difference between the two companies, and the volatility is quite high. Why do we have such a big difference? Let me say that now, in this moment, if you look at the EBITDA of Ferragamo, that is 0.2 billion, the company, we can say that is valuated 5 times the EBITDA. because 0.2 times 5 is 1 billion. If we look at Moncler, the company now is valuated 16 times the EBITDA. There is a huge difference. How is it possible that two companies that are in the same industry, that is luxury, that is so famous in Lebanon, in Beirut, because I remember very well how many luxury shops do you have in Beirut. How is it possible that these two companies are evaluated with such a different parameter? Considering also that when I use this example during my teaching activities in Lebanon or in Egypt or in Brazil or in India, where I most often travel for teaching reasons, nobody knows Moncler, everybody knows Ferragamo. So it means that Ferragamo brand probably is better considered than Moncler. But we can see now that the only thing that investors look in this moment when they approach valuation in the luxury industry, but more or less in all the industries, is about the profitability, the percentage of EBITDA over the revenues. So investors do not look at the EBITDA in absolute value. They look at the profitability in percentage. Higher the profitability, higher will be the multiple applied to a company. And so Moncler, consider the fact that has 32% profitability, they are recognized by the market, by the investment banks, by the investors, with a multiple that is 3 times the one applied to Ferragamo. Considering that when you operate in a luxury industry, but let me say in all the industry, you are stressed about showing high profitability margin because investors only look at that. Higher profitability margin will give you a better multiple valuation, a better market capitalization with all the consequences that you have in terms of raising money. You can better raise money through the banking system and so on. In the luxury industry now, we have this range. Let me say all the companies are valuated from 5 times to 30 times the EBITDA. How the market decide to evaluate you 5 times, 10 times, 11 times, 20 times, 30 times on the EBITDA? On your EBITDA margin. Higher the EBITDA margin, higher will be the multiple applied to your company. It is not the case that now on the market, the two companies most valuated in the world are Hermes and Ferrari car, that are the two companies with the highest EBITDA margin. And more or less, Hermes and Ferrari are valuated about 30 times the EBITDA. Have you seen last week what happened? Something completely unexpected. Hermes with one brand, only one brand, passed Louis Vuitton in terms of market capitalization. Now Hermes with one brand is valuated 270 billion. Louis Vuitton with 80 brands owned is valuated 240 billion on the stock exchange. So what does it mean? That the world is changing. Probably mergers acquisition strategy is not surprised by the market. It is better to go on the market with a strong strategy, with a mono brand vision. And in that case, the companies with a mono brand are priced in the best way. You can see Ferrari valuation is about 100 billion, is valuated 2 or 3 times Stellantis. That is a company that own many different brands like Fiat, Chrysler, Lancia, Alfa Romeo, Maserati, Peugeot, Citroën, and so on. So something is changing in the market. Now, if I have to say also in the luxury industry, which is the risk? The risk is about the political decision that Mr. Trump is going to make. And so you have to take into consideration when you evaluate a luxury company also the possibility that there could be a disadvantage in the exporting activity because America is going to increase the taxes on the import of the company. So that's why in most of these companies, when you approach the valuation, you have to consider also these exogenous factors, as we will see. But considering what I said before, so the valuation will depend a lot on the EBITDA percentage on revenues, which is the direct, let me say, consequence of this. That when you are stressed a lot on the EBITDA because investors look only at the profitability margin that you have, you are probably forced to postpone the investments that are going to destroy EBITDA in the short term, but that are maybe creating EBITDA in the long term. And this is a big trade-off that you have when you manage a company. Let me say, especially the investment in ESG, investment in environmental, social, and governance. For sure, I think you can all agree with me, these are investments that destroy EBITDA in the short term, in the quarter, in the 6 months EBITDA, but they create value in the long term, because if you invest in environmental and social, you probably generate value in the long term. But considering the fact that when you are listed in a stock exchange, the market looks the short term, you are maybe forced to think about short term and not too long term. This is a big trade-off for the companies that are facing. And that's why most of the companies all around the world, they are trying to delist their stock from the stock exchange, because being private could give a benefit to private companies, because when you're private, you can do whatever you want about your investment. You decide by yourself. You are not stressed by the market, the investors, and you can maybe better think in the long term to your company. Okay, in this case, I showed you a first example on how business model can influence. In the luxury, EBITDA margin is everything. But, and this is something that we will see during my course in Executive Master in Financial Management, there are other business models. This is, let me say, a B2C luxury. But we have companies where we have B2C business, mass market, where the financial variable that I have to check when I have to perform valuation is not about the EBITDA, but is about the revenues. Because maybe our business where the operating leverage is so high, and so I need to generate revenues in order to sooner reach the break-even point. In this kind of business, like a supermarket, transportation companies, airline companies, utilities companies in the distribution, let me say that I don't really care about the EBITDA. I care on revenues. Because for a supermarket, the most important thing is to generate revenues in order to reach soon the break-even point. And then after they reach the break-even point, all the revenues generated are transformed into profit. So in this kind of companies, the relevant thing is about the revenues. If I want to pay a restaurant chain, if I want to buy a restaurant chain, what do I buy? I pay the number of clients that every day for lunch and for dinner, they go to eat in this restaurant in Zaytuna Bay. And so I pay a multiple on the revenues because I care about the revenues that the restaurant generate. I don't really care on the EBITDA. The EBITDA depends on the strategy, on the chef strategy. If I want to make a luxury restaurant or a mass market restaurant, so then the raw material cost will be different. But the most important thing is about revenues. And so that's why the revenues are the most relevant figures when I approach B2C industries. But we will focus on that on our master, on my course in corporate valuation. So the first thing that I have to check always is about business model, as I said. Depending on the business model, there will be a more appropriate valuation parameter to be considered. Second variable that I have to consider when I approach valuation in order to reduce the gap between value and price is, of course, the business plan. And this is quite obvious. When I evaluate a company, I have to check the business plan, the forecasted financial variables, the assumptions I realized in order to create the 3-5 years budget of my company. This gives me a better idea about the future growth of the company. Let me say that now is no more like 10 years ago. All the valuation are performed, considering now we are in May 2025, all the valuation that I'm performing in M&A transaction are performed on 2025 or 2026 data. Nobody cares about the past. Even if 2024 just finished, nobody cares on what happened in 2024. All the valuation in M&A are linked to the business plan performance in 2025, 2026. So when I read the business plan, I need to understand if this business plan is feasible, sustainable, if it is objective, and I have to make a stress test on the business plan in order to understand if the company can realize it, if the assumptions that are at the base of the business plan are feasible for this company and for the industry where the company is operating. Third element that is, or maybe better, third factor that I have to consider that for me in this uncertain moment is the most important variable to be considered is about intangible factors. And I don't only mean valuing a branded versus unbranded. This is quite obvious. Everybody knows that a branded company value more than an unbranded one. That's obvious, and I don't want to focus myself on this topic. What I want to highlight with you is that now, when you do valuation, it is really important to focus on human capital. This is the real task for a professional in doing valuation. It is very uncertain, this value. How could we estimate? And what do I mean for human capital? I mean that I started thinking about this element many years ago, talking about a great international manager that you probably know. There was Mr. Marchionne. Marchionne was the CEO of Fiat Chrysler. He was a Canadian Italian. He basically was appointed CEO of Fiat when the company was basically defaulted, with a valuation on the stock exchange of 2 billion, with a lot of debt. He managed to save the company, to restructure the company, and when he passed away in 2018, he dramatically passed away in 2018, the Fiat Chrysler group overall, considering Fiat Chrysler, Ferrari, let me say the Juventus football team, that is not so famous football team in Italy, but it's not the first one, but I have to mention it. The overall group was valuated 150 billion. So from 2 billion to 150 billion in 13 years. And I remember that I was mentioning him, that they used to say that just him, just the CEO, was capturing, in my opinion, about 30% of the market capitalization of Fiat Chrysler. Just him. What happened when he passed away? That in 2 days, the stock price of Fiat Chrysler decreased by 30%, just because of him. obviously, when I was talking about this situation, I didn't have objective numbers. It was just my feeling about the situation. Then I decided to make a research activity with my colleagues at SDA Bocconi in order to quantify this human capital effect in a more objective way. We created a sample of listed company in North America, in Europe, in Japan, in Australia, to see which was the effect on the stock price in front of announcement of CEO debt, appointment of new leader CEO, death of president or founder, appointment of relevant people, relevant board member. And what did I found? I basically considered an average of this effect. And I found that we can price this human capital effect with a premium of 22% on average. Obviously, for a listed company, it's easier to calculate this human capital effect because you just have to see the stock price variation. In the day, there is the announcement and the day after. But which could be this price, this premium that we are available to pay when the company is unlisted? This could be much more difficult. And considering that 99.9999% of the companies are unlisted in the world, you can imagine how difficult it could be to quantify this human capital effect. And we are full of companies where the CEO, the founder, is a person with a huge vision that created a company. Now I can make few simple examples. Let's think about Armani, that everybody knows. Mr. Armani, for me, is King George Armani. Is really beloved in Italy, and especially by Milanese people like I am, because he's from Milan. When in 400 years he's going to pass away, probably 500 years, because it will happen in 600 years. But which will be the value of Armani? Maybe 50% less, 70% less, 90% less. There are companies where one person influenced the value of the company. And let's think the small, medium enterprises that are located in a suburb of Beirut, where maybe there is a CEO that created something, created an equity story, created a company with 50 people that are working there. It is very difficult. But this is the real challenge in valuation, to quantify the human capital effect. And I can also say that I'm in a board of few listed companies here in Italy, and my real dream, and I will reach this dream when I will be appointed in a board member and the stock price of the company will increase by 40%, because it means that I have a human capital that generates positive value. Unfortunately, every time that I'm appointed as a board member, the stock price is flat. There is no reaction on the stock price. Now I'm joking, but this is my dream. So human capital effect is really important. Fourth, exogenous factors. In the last 10 years, we have seen how is important and how these factors can influence the value. And now we are talking about what? Government instability, political elections, COVID, geopolitical problems, the war between Russia and Ukraine, the decision made about Mr. Trump on increasing the taxes on import. All these elements are influencing a lot the valuation of companies, the stock exchange of different countries, and we have to take into consideration all these elements if we want to make, let me say, an outstanding valuation. Now, many examples. As you know, Italy depends a lot on two industries that are luxury and food and beverage. We export a lot, especially to the United States. That is our first market. Depending on the taxes that Trump is going to fix, there will be a quite evident and clear influence on the valuation of the company. And that's why now all these companies that are listed, they are reflecting a bad mood on the valuation because they're waiting about the Trump decision. And you can make a very good acquisition of these stocks with a very good price. I think they're really undervalued, but they're really undervalued because their value depends a lot on the decision on tax on the export. And this is going to influence a lot. I remember 6 years ago, we had a government with a political party that was completely against the European Union. There were a lot of internal fight in Europe between Italy and the European Union because these, let me say, political parties of the Italian parliament wanted to go out from Europe, which was the result that all the investment banks, when they had to perform the evaluation of top big Italian players like Italian Telecom or ENI, our oil and gas company, they used to apply a 2% additional risk premium on the financial methodology on the valuation of companies. So basically they increased the discount rate of Italy because of the government instability and because of the fights that there were between the Italian government and the European Commission. The instability creates uncertainty. And when let me say, the situation is uncertain, the discount rate applied to evaluate companies have increased and the value decreased. So all these elements can influence the valuation. And if they influence the valuation, they can influence the relation between value and price. And so that's why we can have situation when the value could be very different from the price that you are available to pay, because according to the exogenous and external factors, you want to pay less than the value that you obtain in a standard valuation approach. These were the first insight that I wanted to give you. Obviously, we didn't have a lot of time, but my idea is to continue with this field and with this topic during my course of corporate valuation that I still have to fix with Noor. I don't know when it will be placed. I think it will be in 2026 because I will be on the middle of the master. But be sure that I can't wait to visit you all because I really miss Beirut. Last time that I was there was, I think, 3 years ago, Noor. 3 years, 3 or 2 years, I don't remember. I was probably one of the last that came to Beirut before that happened the bad things that everybody knows. And so I can't wait to see you. And now we can start the session with a presentation of this important partnership between two important European business schools. Because for me, Lebanon is Europe, let me say. I don't listen to you, no.
Thank you for your presentation.
Do you have questions?
Thank you so much, Leonardo. Sorry, I was muted. So thank you so much for your presentation. It was really an interesting one. I don't know if anyone has any question now, or we can leave it at the end to the end of the session. So.